Hey, everybody, it's Jeff here once again with the Money Trucker podcast, and welcome to season 2. We decided to start breaking these up into seasons. Just as the seasons change, our show sort of morphs and changes as we go for each season. So once again, we're kicking off with another Financial Friday with Tom Kemler. Today, we're kind of covering a little bit of the economic situation that's going on. We're in the middle of the summer doldrums, so there's not tons of economic news going on, but a lot of international news going on. We're going to talk a little bit about the shipping situation again. It continues to be a challenge for supply chains. And we have got some viewer questions today. Some of y'all have written into us, and we're going to answer those as part of this. And of course, the most interesting thing. So stay on, and we'll be right back with you in just a second. Hey, everybody. Welcome to the Money Trucker podcast in season 2. And it is Financial Friday with Tom Kemler. Tom, how you doing, my friend?
Tremendous, Jeff.
Just a quiet news week this week, right?
Yeah, quiet indeed. I'm interested about the season 2 thing, because I think we started in April of last year. So year 1 was what, 16 months?
Yeah. Well, it was actually 2 different shows because it was the
that's right.
The Entrepreneurial Essentials show for when you and I were the voices out of the hinterlands there during COVID.
Yeah.
And then beginning of 2021 here, we changed it over to the Money Trucker podcast. So we've run about 8 months on one season. We're going to be running quarterly seasons going forward here.
Tremendous.
Awesome. Well, we want to kick off with some economics today. What do you want to
kick
off?
Yeah, we'll talk about economics, because that has been probably maybe in a way a segue back to what we were talking about when we started back at the beginning of last year. Was that when we started in April of 2020, nobody was thinking about economics. Everything was COVID. This week, obviously, there's been a lot of news that we'll get to later, but there hasn't been much consideration. Oh no, it's a giant orange cat.
There's a cat.
Cheeto. This is Cheeto.
Oh, okay. I've never met Cheeto before.
Yeah, he's usually a lot shyer than that. But he's as orange as can be, so hence the name. But this
is why we do a video podcast. You can't get this on an audio podcast.
So anyway, where I was going was that even though nobody's been looking, there's been a fair amount of economic news this week, and a lot of it's been good. So we'll dive right into that. I'm going to share the screen, and we will start off with the Chicago Fed National Activity Index, which is what I hope you can see.
Yes.
And this is a number, and we're going to do a little bit of a deep dive on this, but as in name implies, National Activity Index, this is one of the bigger reports that comes out. And it was kind of a monster report. I mean, the prior number, and they thought it would be kind of flat, and it came in at way above expectations, way above the range. And so I went out to the Chicago Fed, and I pulled up this chart here, which is what the index looks like over time. And so this zero, it's a diffusion index, so it's a zero line. But the zero line is actually the trend in the economy. Mm-hmm. So it's not just whether you're growing or not, it's whether you're growing above trend or not. So you can see that you're going to hug the trend line. And this is what was difficult to explain before COVID, because the numbers never got really very big. And even now, I mean, even, something like 0.5 is a big number in this index, but you can see just the giant plunge that we had with COVID in the first part of 2020, the rebound. But then you can see that we're still stronger than trend for the most part after the initial rebound subsided. So, particularly this stuff here in 2021 is pretty strong. And part of that, we had a few months there that looked pretty negative on the housing and real estate fronts. And, we got a very strong month on home sales. It came in, above expectations and above the consensus. Investor confidence was very strong. That's a number that's, almost 10% increase. I mean, and one thing about State Street is that this isn't a survey. This is actually what they look at how investors position themselves for confidence. And basically, if you're in, stacking into bonds and not into stocks, then you're not confident, and vice versa. So, there's been a deployment towards stocks, and that shows confidence in the economy. And then these corporate profit numbers came out. Now this is year over year, and this is for Q2. So what these are just astounding. But what this shows you is that, Q2 of 2020 was the COVID quarter, April through June. So, but it shows you how much we've rebounded. This is not something you're going to hear about in the financial press. Even with inventory and consumption adjustments, which are basically a lot to do with inflation. I mean, these are extremely strong numbers. So, very positive series of events. And the personal income came out today. Now, 5 out of the 6 things here are all in the range. But the headline one, the actual personal consumption month over month, did come in above the range, above consensus, above prior. So it met our standard of being a surprise to the upside. And what I think is most important about this is that there's been this narrative out there for really ever since the first COVID stimulus checks went out to everybody over a year ago. And that's that when we saw personal income statistics beat to the upside, it was always, well, it was just the government shoveling out money, or it was the PPP money, or whatever. It was always, but there wasn't anything in July that went out, and we had a very strong month on income, and then everything else, including prices, which was kind of surprising. I mean, they're strong. The PCE, the price indexes are running 3-4%. We're going to talk a little bit more about inflation later, but they weren't unexpected. But the headline number of 1.1, this was really a big beat. On the negative side, we did have the PMI, which is Purchasing Managers Index. They report twice a month, so they have a flash, which is like their preview of what their month is going to look like, and then they have a final 2 weeks later. So the flash number is usually what everybody pays attention to, because unless things are really weird, and they've been weird for a while, so there may not be the linkage that there usually is, but usually the flash is like what the final number is, and that's why the flash gets so much more attention, because it tells you what changed from month to month. And this came in below consensus and below the consensus range on both manufacturing and services. Now, these numbers over here in the mid 50s to low 60s are still pretty strong. They're just not as amazingly strong as these numbers here. The one thing that I would say, though, some of this weakness may have been borrowed from the prior revisions, because if you look, the composite number was revised upwards by 4 full points. And a lot of that was the services number, which had been lagging. Usually services have been stronger than manufacturing for years in our economy. And that's why you can't average these numbers together to get the composite, because services dominates so much more than manufacturing. But still, you see manufacturing was actually revised down, and it was the services revision upward that carried the composite as strongly as it did. So if you look at that 4 points here, then to the extent that the economists were, measuring that strength, it was probably in range if you add that 4 points onto these numbers over here. So really not all that weak. And the Richmond Fed, that's one of those regional manufacturing indexes that can be volatile, and they can, and they're also a smaller part of the country. So overall, very positive for the economic news that was out this week. I want to do a few screens on inflation. Now, most people probably didn't see this story this week. Did you see this story?
No, I didn't hear about it at all. I mean, this is the second major fire that they've had down in Mexico.
It is. And this one, everybody remembers the BP fire in the Gulf of Mexico.
Yeah.
This was almost as bad. In fact, this has cut off more production than the BP oil spill did back in 2011 or 12, whenever it was. This is cut off. Mexico produces about 1.6 million barrels of crude oil a day. This platform itself handled about 450,000 of those barrels. So about 25% of Mexico's oil production has been shut in because of this fire, and it killed like 5 guys. Now, just as a side note, one of the things that this particular fire got some coverage by some of the Green New Deal folks like AOC, and she was tweeting out that this showed how capitalism is ruining the economy. Now, the one thing that I would say about this is that Pemex is not capitalism. This is state socialism. This is the Petróleos Mexicanos. This is the state oil company of Mexico that has no competition. So, and it's got a very poor safety record, mostly because it doesn't really have to answer to anybody.
Yeah. Like I said, the second major fire that they've had in the last couple of years. They had that boiling, literally looked like a boiling cauldron of flame.
Yeah, no, that was like 2 months ago. Yeah, it was a natural gas line.
Yeah.
And that was kind of easily put down because I don't know whether they just, it was like I think the platform, one of the anchors that hold those platforms down, I think it dragged in some heavy seas and it just ripped a gas line. And but now that this deal, this is much more like a BP type deal. And this is going to take a while. Like I said, I think at least 5 guys were killed in this, which is, I think the BP number was around 10.
Yeah.
But to answer one of our questions that we got this week, someone asked about what supply chains would look like. And I didn't anticipate the question, but I was going to talk about it, that the supply chain problem does seem to be getting worse. And a lot of it has to do with the way various countries are reacting to COVID. We talked last week about the Ningbo port. China had one case in the Ningbo port, and they shut the whole port down. And that was the I had said third largest, actually the second largest port in China, and it's the largest port in terms of what faces the United States. I saw this week they had thought that maybe they would keep that port closed for several weeks, and actually they resumed some limited operations yesterday. So that's a bit of a help. But I mean, you're seeing these draconian lockdowns in places like New Zealand and Australia, and what just seems both of which maybe they're not extremely large countries, but they're crucial in the shipping world, because pretty much all of their economies are either export or import oriented. And so if containers end up in a port and it shuts down, then that kind of takes that cog out, that gear out of the mechanism. And you see these kinds of things, and as they blink on and off around the world, and then once the equilibrium is disturbed, then everything's out of balance. So the answer to our viewers' question is it does not appear that things are going to improve anytime soon. And particularly with the fact that this Delta variant has proven that the vaccines really don't stop it. So we're having issues that are going to maybe result in even more lockdowns. So and that's directly impinges on the supply chain. Now, one thing I would say about the supply chain that's interesting, and this is, you're going to have to bear with me a second on this, was that I saw it today where the Supreme Court had overruled the Biden administration on the eviction ban. And they've been pretty clear about it, but then they thought that they didn't have to make a ruling because the eviction ban was about to expire, and they didn't think that they would reinstate it. Well, then when they did reinstate it, they had to come out and say, no, you've overstepped your authority. And actually, I for those who want to get into the weeds, it was really amazing what the authority the federal government felt that they could operate or install the eviction ban in the first place. Was that, and they actually claimed this in legal documents, that because the federal government has some oversight on things like rat and pest controls, that somehow it can basically say you can't evict people. I mean, it was the biggest overreach of authority that I was like, they really argued that in front of the Supreme Court. So what does that mean? Well, I mean, there's been this, this constant talk about the labor shortage, and everybody's like, well, people are getting paid to stay at home, and there's been two hands to this, people staying at home. On the one hand, you have these enhanced unemployment benefits, which are starting to run out. They've run out in a number of states, and they're starting to, ticking down nationally. But then the flip side is that if you're getting unemployment that's pretty generous, and you quit paying rent, and you don't get thrown out because you quit paying rent, then you really don't have to have a job. And so that was a hard combination to beat. So the fact that people can now be evicted means that even if you've got extended unemployment benefits, you may still have to get off the couch and get a job. So to the extent that we've had a number of people that have been just not working because they didn't want to, they can join in now and get more productive, and that may help. That may help the supply chain. Wanted to talk a little bit though about inflation, because the inflation is affected by a number of things. The supply chain is obviously affecting inflation. It's making goods more scarce, and with goods more scarce and the amount of money that's been in the money supply increasing dramatically, there's been nothing but inflation, and the big, Jackson Hole, which is the Fed and the administration's big confab up in Jackson Hole every August about monetary policy, is actually taking place right now.
It's all virtual this year, isn't it?
Oh, they're not up there? No, even in a wide open place like Wyoming with
what
all
does
the
that
fresh
matter?
air.
What does
They're
that
still
matter?
going virtual?
I think I heard that Jackson.
I'll bet you're right. I got to tell you, that's just stupid.
Yeah.
Anyway, that not only does the supply chain issues create inflation, but just even the slide before showing that oil platform, taking 500,000 barrels a day of supply out of the world's petroleum supply, and now we've got a major hurricane brewing in the Gulf of Mexico that's going to shut in several million barrels a day of U.S. Gulf production. That's going to help inflation too. I see where.
Well, no, because they don't include energy in inflation. So what does it matter? There's no inflation.
Well, they include it. They don't include it in the quote unquote core.
Yeah.
Which excludes food and energy, but it is in the overall number, and it's certainly in people's minds when they pay at the pump and they go to the grocery store. Just back though to the financial conditions index, which is something we've shown periodically. This is an index where when the more negative things are, the more positive the financial markets generally are. I don't know why they designed it that way, but that's it. So you can see we were cruising along being quite negative, and actually we're doing the most negative that we had in years, which meant that things were going really well at the beginning in 2020, and then we have COVID, and then we went back down, and this little trough right here was actually slightly lower than this. But you can see we're tightening up a little bit, and this is a bit of a concern. Now you can see that it doesn't have to be like a bull bottom and continue coming up, but one of the things that bothered me about this is that if you look at this index, and this is from the Chicago Fed also, they have an adjusted financial conditions index, and this is to me much more interesting because what it shows in the black line is the adjusted number, and you can see that whereas on the previous screen the actual number that's been recorded, which is the black line, this trough right here got lower than here, but on the adjusted basis we didn't get as low. Now the key is this color orange, and that's the adjustments for adjusted. So what is the big adjustment? It's inflation. So what they're saying is that when inflation is an adjustment that pulls this towards zero, i.e. it's a negative, you can see, there was a lot of concern in the years running up to the COVID situation where, there was concerns about deflation. The Fed was always saying, well, we would like to run hot. Inflation is below target. It's below our target range. And you could see that the adjustment was negative for inflation. Well, that's flipped around, and it flipped around with COVID. We had a little bit here, but for the most part, ever since COVID and ever since the supply chain issues, which were and still are largely related to COVID, have taken and become a net drag on this factor and this metric, and it had been a positive adding to it for years. So this bears watching, because this is, to me, the clearest demonstration of what inflation means for the financial markets, because the closer we get to zero from coming up, the worse the financial markets are. So here it looks like we're doing really well, but when you go and adjust for inflation, we didn't get as good as we were here, and then we're still headed back up. So something to consider. Atlanta Fed is something we've talked about a few times. We were talking about it for several quarters, because it was consistently over and above what the blue chip Wall Street firms were predicting. And now we've had this interesting thing for the last quarter, and this is the second time we've showed it on this show, where the Atlanta Fed is below the Wall Street consensus, and they're actually diverging. The Wall Street's looking for things to roll up towards 8, and the Atlanta Fed is now dropped below 6 in the last week. Pretty interesting stuff. Although I would say that 6% GDP growth is still pretty strong.
Yeah.
But back to inflation a little bit. We've been talking about how the financial markets expect inflation to return to its target levels. And one way to measure that is that there are products out in the marketplace that you can enter into trades to hedge yourself against inflation, and a lot of large companies do. And so this just shows what the inflationary expectations were at the beginning of this year and where they are now. And what's interesting is that, obviously inflation has gone up since January, so you've got more to hedge against. But it is interesting that they're converging, although it looks like it takes several years for them to get as close as they were. And I will point out that this is only 1% difference, so that the gradient on the side is a little bit misleading. But anyway, this is a graphic that shows how the financial markets are expecting inflation to be a transitory feature. It's not something that I necessarily expect, but what we've been saying, what I've been saying is I don't think inflation is going to be transitory, but the markets keep saying transitory. And even coming out of Jackson Hole, they're still saying transitory. Or I guess they're not in Jackson Hole. Is there at least one monitor in like a lodge up in Jackson Hole?
It's 100% virtual, so I don't know.
So it's not Jackson Hole. So
it's really not Jackson Hole. They call it Jackson Hole Symposium, but there's not really Jackson Hole.
Not even one guy up there.
It could be one. There could be somebody that lives up there, and he's got his TV turned on. Everybody's looking over his shoulder or something. But
I just can't.
Not. They didn't.
Last but not least, on inflation, I wanted to show the Fed balance sheet because, you go back and consider that inflation is always and everywhere a monetary phenomenon. So once a week, the Fed shows the level of assets that it has. And this is 8.3 trillion. What I wanted to point out is that right before the great financial crisis in late 2007 and early 2008, the size of the Fed's balance sheet was somewhere around 850 billion. So in the 13 to 14 years since then, it's up by a factor of 10. And now that is just an amazing amount of money. And what is that? That's mostly, monetizing the debt. Instead of the financial markets buying the treasury bonds that are issued when the federal government runs a deficit, the Fed buys it. And so we've packed on 8 trillion, gone from 850 billion to 8.3 trillion. So the size of this balance sheet is huge. And, that's, to me, another reason why I think inflation is going to be less transitory than the markets believe. But that's what we have. So before we get back into the most interesting thing, if you wanted to read me the other questions, I thought we would take the.
So why don't we start off with Bitcoin? We had a question. Bitcoin now is going back up. I mean, it had been down like 30 or 40% over the last few months, and now it's had like a 20% pop up in the last week. Has it replaced gold as a safety asset?
I'm going to have a nuanced answer there. Yeah, I follow Bitcoin. I don't own any Bitcoin. I've never owned any Bitcoin, but I follow it because it matters now. It's a big thing. It was over 60,000 per Bitcoin early in the year, and then it actually went as low as like 28,000 several weeks ago, and then it went from basically 30,000 to 50,000 in the snap of a finger. I mean, that's 67% in like 2 weeks. Today, I noticed, at least this morning, it was back down to around 46. So it had dropped like 10% in 2 days. So it's volatile. Do I think that it is replacing gold as a store of value? Here's the nuance. I'm going to say no in a general sense. And here's why. What a lot of people don't realize is the overpowering factor of China when it comes to Bitcoin. Over 2/3 of all Bitcoining mining on the planet is done in China. And ironically enough, like another quarter is done in Iran. So you have, and Bitcoin trading there. I read an article when I was answering this question. Now this is a couple of years old, but it was estimated in 2018 and cited even a couple of years later that Chinese trading was about 90% of all Bitcoin transactions. Now the Chinese government has tried to stop Bitcoin. They don't like the idea that their authority has limits, and so they've been stepping in, and I think to mixed results. I think that the Chinese they have ways to get around what the government does, even draconian things. And what we've seen in the last few weeks also, which is to me not coincidentally, is the Chinese government has come in with a heavy hand on the Chinese tech companies. There were those for-profit online education companies that they just basically came in and said, "You're now a utility. Or not even a utility. You're now a nonprofit." And there's been a number of those companies that have been squashed. There's been a number of entrepreneurs that have been slapped down. The Jack Ma thing was in the past, but I saw there was a news article today where the Chinese government is telling Chinese tech companies they're making it even harder for them to list their shares on American exchanges. There's also been a number of very high-profile quote unquote graft investigations. Xi Jinping has been emphasizing the wealth inequalities in the country. It's usually a sign of another purge. So to me, all of this is basically saying that the kind of elements that would traditionally cause wealthy Chinese to want to hide their money in Bitcoin, they're all swirling right now. And so to me, that is, yes, it is a safe haven, but it's not a universal safe haven. It's mostly a safe haven driven by the Chinese. So nuanced answer. Although I will point out, at least for the Chinese, traditional Chinese society owned a lot of gold. I mean, they were. Their culture has long had an affinity for physical gold, and it seems like they are transitioning to Bitcoin as a safe haven. But I'm going to say that the vast amount of power in the move of Bitcoin still is from China.
Yeah. So are you feeling like, so it's not necessarily governmental?
No, it's people fleeing the government.
People trying to hide money away from the government.
Yeah, get it out of my house, get it into some place that can't be traced. Although it can be traced, I guess.
Yeah, I guess
I've never understood whether it can be traced or not, and then.
Well, it's when you convert it out of it as the problem, because then it gets tracked in the banking system. We were having the group I'm part of on Mondays. We were having a conversation about this because I guess one of the guys that's in the group, they're a big they build prefab equipment and stuff like that, and somebody had approached them about doing a project but paying them in Bitcoin, and he was trying to he's trying to get his head around this, and he's like, okay, I just don't get it enough to understand it and why somebody would want to do that. And one of the other guys that has a lot of financial background or especially in that arena, he's like, yeah, it's good, but the problem is, if you try and convert it back to dollars right away, then you have to answer a lot of questions as to, well, where did this come from originally, and where did they get that? And so now you've got to trace back and try and figure out what the back end side of it was. So you could get yourself into a situation where your account gets basically locked down while that's all going on.
Well, I mean, if it were a true store of value, then there would be these lubrications to the system where you could just go in and produce a Bitcoin and charge your Bitcoin account, and just like you're charging a dollar account. But the bottom line is you can't do that. Not very few people accept Bitcoin. Business wise, it's a very time consuming thing. My understanding, it takes up to an hour or two to actually buy a Bitcoin. So they, it's not ready for transactions where you can just tap your Bitcoin card and buy your groceries and leave. But for big amounts of money, it's fine. At least if you're a Chinese guy with a lot of money that you need to hide, what alternatives do you have? I mean,
maybe
even if you buy a lot of gold, what are you going to do with that? I mean, they could search your house and find it. So
well, it's not like you could just take it down to your local grocery store and hand somebody a gold coin either. It's you
right. That's the thing I've always told people about stores of value. Like if we ever get to a situation where the credit cards and cash aren't working, and you're not going to be able to take your Krugerrands and go down and buy groceries. I mean, at that point, society would be so far gone that you really need a gun. And that's hopefully we'll never see that. But
I'm with you. Yeah.
But
Okay.
there was another question, I believe.
Yes, sir. There's one more, and that is probably leading up to our most interesting thing. Will there be an economic impact from the Afghanistan situation?
Oh yeah, this definitely, because we're going to have the most interesting thing for the first time ever is going to be a repeat. It is Afghanistan, and I'll answer that question with the same kind of nuance that I would say that we saw with the Bitcoin. In and of itself, I would say no. And you can see the financial markets right now are not reacting. Afghanistan's an impoverished state. It doesn't have any, wealth. It doesn't really interact with the outer world very well. Very insular society. However, if it is a situation where, in last week, what we didn't talk that much about Afghanistan. We talked about, would this lead to, other dominoes falling? And I talked about Taiwan. Mm-hmm. If the Chinese make a move on Taiwan because they perceive American weakness because of Afghanistan, then yes, I think a move on Taiwan by mainland China would have enormous implications for the economy. It would create a lot of fear. It would create a concern about a kinetic conflict between the United States and China. As of right, and the flip side is, even if China doesn't do anything with Taiwan, the Afghanistan thing can still metastasize if it turns out that this is like the match that lights a whole new generation of, spectacular terrorism. Mm-hmm. With the Taliban exporting terrorism in any number of ways, being a cauldron for producing it here, possibly sending it out with all these people that are flying out of there right now and fleeing the country. Are they salting the crowds? Kind of like what Castro did during the Mariel boat lift when he sent all of his criminals over to the U.S. There's some evidence that that's happening. I guess there's been like 100 guys on the no-fly lists that they know about. To the extent that you have this diaspora of terrorists that hatch plans that then get brought to fruition, that would be a problem too. So in and of itself right now, Afghanistan's not a problem, but if it kicks off these dominoes towards like Taiwan, and I thought I would bring up the map of Taiwan again, just to reiterate, I cannot help but think that this is probably the biggest risk that we're facing right now, because the world's in a chip shortage. This island here has Taiwan Semiconductor, which is the largest chip manufacturing firm in the world, and it's sitting right there. If the Chinese were able to grab this, then they would have something that, it's already scarce, but they would be able to keep it for themselves, and we would have even less. I mean, it would be disastrous for our economy. And what I wanted to point out is this little island right here it's called Kinning Township by the Chinese, but the mainland Chinese, but this is actually two islands. This one right here, and this one is called Quemoy. These are islands that are controlled by Taiwan. These islands up here are also controlled by Taiwan. And they're bristling with defense installations. This was they almost fought a war with the United States over this in the late 1950s. You can look up the history of that. And this was a military area from 1958 until 1994, but it's still this island is 6 times the size of Manhattan. About 350,000 people live on it. Unknown what its defensive capabilities are, and it just is a question of how much of a fight would they put up, how and what level of casualties would the Xi Jinping mainland army be willing to accept to take it. But if they literally, I mean, it reminds me of Pac-Man, because you got kind of this mouth here that's like ready to chomp on it. If they take that, it would be a psychological blow to the Taiwanese. I don't think it would. I think they could take this with casualties that they'd be willing to accept. The question would then be like, what would the rest of the world do about that? Mm-hmm. And I have to say that the rest of the world would be led by the United States, and we are not looking our strongest right now, by any means. What we've been seeing in the international arena, and our administrative leadership, the president and his cabinet look exceptionally weak right now, and that is, I just got to wonder if there's a domino that could fall, this would be it. And to me, it would make a lot of sense for them to just take a little bite. You don't have to mount an amphibious assault across, something this is 3 times as wide as the English Channel. You don't have to do that. You do this, and it creates momentum and doubt, momentum for mainland China and doubt on the part of the Taiwanese. So, that's the biggest concern that I have. It's still the biggest concern I have, and that's just I think it's going to remain a concern for a while. And one of the other reasons why I believe that it's a concern is that the Chinese, that they had their 100th anniversary earlier this year of the formation of the Chinese Communist Party. They had a big simulated, and I actually watched it. They had a big simulated video of how they're going to invade Taiwan. Now, Sun Tzu would say that that's probably a deception, that they would, put out a video, here's how we're going to do it, while they have plans to do it another way. Yeah. The other thing that I would say about Taiwan is that for a long time, between the Taiwanese and the U.S. and some of the other countries in the area, there was not there wasn't an urgency to really keep the defense knife honed sharp. And what we were seeing was that there was a lot of, I think the Taiwanese wanted to trust. You go back to the 90s, I think they saw that they could maybe be like a Hong Kong, that the Chinese were going to keep their distance with Hong Kong, and so they wanted to interact with the mainland more. The mainland started to get to be much more market oriented. That there's a lot of trade that goes back and forth, and so I think that they were reluctant to raise the ire of Beijing. And other countries didn't want to raise the ire of Beijing by supplying them. So yeah. I want to think that, you go back to like maybe the late 80s on a relative basis, Taiwan was much stronger then than it is now. Yeah. Now, in the last 2 or 3 years, they've recognized that there's a problem, and they've started spending money. They've started reaching out. They've created, particularly with Japan. They don't have a formal treaty with Japan, but they've reached out with Japan for some mutual defense assurance. And as a side note, from a historical perspective, that's fascinating, because in 1905, the Chinese took over Taiwan. I mean, the Japanese took over Taiwan. It was the first. It was the first part of their Asian experiment, their Asian expansion that created World War II in the Pacific. They took over Taiwan and named it Formosa.
Yeah.
And it was a Japanese colony until 1945. So the fact that they're old enemies, and I mean, you know, the Japanese were, you look at the history of what they did in South Korea, or in Korea in general, and in China. I mean, they were not benevolent colonialists. They were brutal.
They're the new warm fuzzy Japanese. So,
well, they are now, but I mean, back then, and you know, if you look at, I'm just saying, if you look at the friction between South Korea and Japan right now, I mean, they're still not giving up on the whole comfort women thing.
Yeah.
And a few other things, and you know, I'm not going to say whether they should or not, but it's interesting that those are still problems today, and so they haven't forgotten. The Taiwanese are willing to forget and say, hey, you know, we need your money, and we need your tech, and we need your implied muscle behind us. And so Australia is also looking at working with the Taiwanese. The United States has been much more open about you know, putting even men into Taiwan. We've started rotating in like 100 or 200 guys on you know, as part of these war. I mean, as part of these defense contracts, you know, we deliver the goods, but then we deliver these guys to like show them how to use them, and you know, all part of the service, and they're there kind of all the time. So you know, in a way, I think it's a facade to create, you know, a bit of a small garrison of Americans. And so but in the grand scheme of things, I still think Taiwan is way behind where they should be, and they're skedaddling to catch up because they realize that they're in a problem. So again, if I'm China and I'm looking at that, I'm saying on a relative basis, you know we're getting stronger all the time, but if we can see them getting much stronger in a few years, they may be relatively harder to take down than right now. So that's why I'm very worried about this. This is my premier it's my premier geopolitical concern.
All right.
And with that, I bid you adieu.
Yes. Well, thank you very much, Tom. And folks, it was fun being able to take some viewer questions, and we would like to incorporate this in every show. So the only way we can do that is if viewers have questions. So please make sure wherever you're doing this, wherever you're watching it, that first off, subscribe to the channel. But second off, make sure that you are including a quote or some type of a question in your comments, because we'd love to take more viewer questions like this and be able to really hone the show into what y'all are interested in. So thanks a lot.
Hopefully, I would just add, hopefully you'll like the answers.
Well, yeah,
if you like the answers, and then that would be, that would be great. Then I think that would draw as many questions.
There you go. And the beauty of doing a show where we tape it ahead of time, we don't get to even get that until later. So we just assume. So let us know if you don't like the answers to the questions either. We'd like to have a little bit of a discourse and interaction with you.
Absolutely.
So thanks a lot. We look forward to seeing y'all back here next week. It's exciting to start season 2 of the show, and we will move forward from here 3 to 4 days a week. So everybody have a great day. We'll see you back next week.
Bye.